Good evening, traders. It is Monday, April 14th, 7:02 p.m. Eastern Time. Welcome to another video with Digital Goatz Academy. I'm your host, Antoine Farrar, and welcome to our market overview segment. Now, I'm excited. I'm excited because the market is showing us exactly what we've been talking about. Now, I know there was a news article. Well, first, if you're tuning into this video, make sure you hit that like button, comment, and subscribe. But there was a news article or, a clip on social media, one of these business outlets that was talking about the tech sector could rally Monday and all that. Well, we're in Monday right now, and there hasn't been a strong rally. Now, we do have that the market on Sunday, yesterday when it opened up bullish. It came down to collect a couple of gaps that it had, and then it pushed up, and now we're at a current level of resistance at the beginning of the week, right? So Monday it didn't have, like, I don't know what they were. I feel like that was clickbait, or I think that was to lure in people. But even if say you were going to invest in a stock, you obviously would still want it to correct itself, see what best price you could possibly get at it. Same thing we're doing with indices. So I'm looking at S&P right now. So let's just kind of scale out first where we've been, where the market opened up. Now, when it opened up Sunday, it started bullish. Like, it collected the gap, which is somewhere within, you can see how funny this candle looks. Somewhere within that space, there was a gap made on a smaller time frame. Market pushed down to collect that, then pushed up today, well, this morning in London, and then started rejecting that area. Now, one thing that I was saying is that I was like, okay, the market is not probably going to do an aggressive pullback, or it's not going to be as clean as we like. It'll probably take some time. So the one thing that I did outline, and if I could show it again, hold on. So I said that the market could possibly do something like this. So we're looking at a line chart. So that we can possibly have something like this. I'm still thinking we're heading to the top of this gap right here. We never collected any liquidity from this gap that was made on a higher time frame. So the only moves that we have is this level of structure and then the small pullback that we have above here. So I'm thinking this is the week that the market is pretty much going to try to correct itself. Then maybe Thursday, Friday, if we get down to this level, we'll have that bounce move that people are predicting. Now, I don't know if we're going to stop at the at the top of this high. We can go back all the way to these levels because we still have support here, right? We still have support in this area that the market could want to respect. I know we do have the market did play out to that inverted head and shoulder, but I know it normally, after it tires out, the market normally tries to collect that. Can't really see it, but you see that green space that I have right there? It's an inverted head and shoulder on the smaller time frame. And that was the move that carried us up. So you can see the market was maintaining above this previous level of resistance, this previous high. And I think now we're going to come back to, because to me, this isn't a strong level of support for us to have a strong foundation to continue buying up. We are consolidating, but again, what we did today was we hit a ceiling and the market started rejecting from there. So my expectations was that the market was going to start pulling back to some of these lower levels. I even think it's going to blow past this level of consolidation right here. And that's like across the board for indices. You know what I'm saying? What's neat about indices, which I wouldn't recommend like trading them all at the same time, is that they're pretty much giving you the same picture. So you just have to find your entry and you choose whichever indice pair that your account can pretty much manage. And I mean, it should be a field day for people. You know what I'm saying? Like, that's my expectations within the market. So the one thing that I drew earlier this morning in retrospect to S&P, the S&P it started creating resistance like up here. So my expectations was that it was gonna push down from this trend line, this red trend line that you see, the first one, the bottom one. That was my expectations, but I still drew another trend line because it actually created data, which is what? It's aligning with the level of consolidation that I had. Whenever I have a highlighted like yellow or orange, for me, that indicates for on my channel, that indicates that that was a form of consolidation. So you can see that we tested it one time, we tested it here, and we tested it here. So you can see the market is actually trending down from these positions. We do need breaks of structure at these lower levels, but like I said, like I don't believe like this support structure is a strong foundation. I think that is weak in the market to come down and actually test this level. Once we get back to this previous high, we'll kind of know what we need to do if the market's going to continue pushing down or if the market's going to decide to push all the way back up. But what I'm thinking is that we're at least going to come back to this gap. So it could be a slow week for S&P, basically accumulating those buy orders. So what that would allow you to do is that in the stock market, anything under the S&P, you should be able to buy into it without worry of like, high volatility that, you'll be scared of how the profit is moving. You know what I'm saying? Because again, when you buy into any market, you're going to start off negative until you turn over to positive. So US 30, the only things I talk about is US 30 and S&P 500. So this was the gap that US 30 made. Yes, well, the open of Sunday. So this was the gap that was made, and you can see that the market played around. It created this funny looking candle, which it didn't look like this when the data wasn't this far into the present. It looked a little bit different, but last night it did do, or what time was that? Yeah, it was last night, 11 o'clock. I remember even messaging the group saying, did y'all see that? Because the market did a liquidity sweep, liquidity sweep super fast. Like it was fast. This candle was like, and it actually created structure on the smaller time frame. So it's non-existent on the higher time frame, but on the smaller time frame, look at this. Candle pushed all the way down here. And I was actually able to catch that because my expectation was that the market was going to start falling from this gap, but it decided to push up to higher levels. And then here we are is at a previous level of support. So like I said, I do think that we're trending down because it's hanging around this gap for a while. I think we're going to come and collect lower levels. Now that does bring something something that I want to bring to the community's attention. This is something that I start doing because when we're looking at the market, we're looking at it like US 30 and S&P against the United States dollar. This is the indexes for indices, you know what I'm saying? So this is just US 30. This isn't like US 30 against the United States dollar. And as you can see, there's a little bit more I guess lack of information because of all the gaps that's actually, on this chart, right? So I started looking at that, and that kind of explains when I'm not paying attention to like some of these moves that the market makes. And, it's like, why did it do that? How could it have possibly do that? And then you come to the index of the Dow Jones or S&P 500, and you see that, oh shit, there was a gap that was made right there. But I couldn't have seen that because I'm seeing it as US 30 or S&P against the dollar. When I'm seeing it as just, that indice, I'm seeing more information that's relevant to how I can, navigate better as a trader and stuff. So you can see it did it yesterday. What was that, 9? No, this morning, 9:30. Is this a 9:30? What is it, 1500? That's not. Oh, because that's on the 11th. Yeah. So this morning. The 930 candle, it gapped up. So you can see there's even a gap within this market, right? Within this area, on top of another gap. So I use that information to say that, okay, the market are probably like basically play around to the zone. But as you can see, it is creating resistance and it should continue to push down to collect, like at least push down to these lower levels. One, it hasn't respected this consolidation area right here. What do we talk about? If price leaves consolidation in order to validate that it is truly like buying up or selling down and stuff, it should want to retest the consolidation, especially with all these gaps that's being made in this market. So that's what I'm looking at now for indices. I'm looking at them to actually start correcting and give us basically a better form of support so that we can buy off of. Now, this could be the leading, like for instance, this could be the leading, how can I say? This could be the leading momentum, and the market could want to do a shallow retest in order to create support like at a previous high. So we'll just have to see what the week gives us. But like everything that we've been basically looking for to respond, the market has been responding to us with it, right? The only thing we got to do, especially since like for me, I have all these annotations left over, like you just have to wait and let the market show you, you know what I'm saying, its hand. So wait for these levels of structure, wait for closes of candles. It's only 7:14 right now, so we know that this is basically consolidation territory because there's really no momentum left for indices or you know, US dollar pairs. The dollar does open back up at 8 p.m. So, well, the DXY does open up at 8 p.m. So you may get a reaction and we'll kind of have more clarity what the market is showing us going into London. But like I said, I believe that we're heading for a correction territory so we can get back to these buy zones. And I think the buy zones either come, Thursday or Friday. And then you better be ready. And it may not come even this week. It may be in preparation for us to catch it next week, depending on how long this market takes to actually push down to these lower levels or give us the break and retest that we need to continue buying up. But that's what I'm looking at. Same thing is reflected by one thing that I was looking at this morning was that when I got that information about the tech sector is supposed to be having the biggest rally ever, I started looking at cryptocurrency because it's obviously in the tech sector. And cryptocurrency, well, Bitcoin. Bitcoin hasn't really been making no abrupt moves up. It's basically been keep creating this resistance right here. So what I'm looking at is that we'll probably come back down to test these levels too. And you can kind of see that US 30, S&P, probably even the NASDAQ align a little bit with what cryptocurrency is showing us. So it's almost like these assets are starting to mimic each other, not in prices, but in their general movement. And it's not going to be consistent, but overall, you know what I'm saying, if you understand. So this level of support that we broke down went lower. I'm thinking that price will try to come back to that 78K area. And I think that'll probably be potentially our buy zone again once we get if we get price to come back to those lower levels. So like I said, the dollar index isn't open right now, so can't really give any analysis on it today. And to be honest, it didn't really do much this morning. I didn't even really watch it because today is Monday. So I do know that it is balancing between that 99 area. I don't want to see it to go lower, but if it does, I mean, I don't control the market. If it does, then, have to reanalyze what the dollar index is possibly doing. But we are in recessionary territory. I mean, you might as well even say that we are in a mild recession right now. But as you can see, I don't think it's really having a major impact. And I mean, at this point, what could more bad news do with, tariffs and all this other stuff that's happening? So I mean, I don't even think anybody's necessarily concerned about like what the dollar is doing, but I do think that we're at a major level of support, and this is our buy zone for the dollar index to start showing some positivity. So let's see if we'll get it this week. If not, it'll be trying to push down a little bit lower. Probably to this area, that 97 area. I had that area annotated last year. I forgot why, but I think it's because there was a level of consolidation there. So again, I know the market is attracted to consolidation levels whenever it's trying to buy or sell, but you just have to be able to spot them, by back testing and stuff. Next thing I wanted to talk about is a Forex pair. Yay, Forex pairs, right? Euro GBP. I was looking at this currency pair last week. This is something that me and my community started doing, is that we're going to start looking at least one Forex pair monthly. Take advantage of it, because I mean, to be honest, most Forex pairs are a little bit easier than dealing with indices. Well, I would say a lot easier because of the backlash that indices bring, but also the once you trade indices, you can kind of see like the formation of how the charts are, and it's easier with Forex pairs than it is with indices. So I was looking at Euro GBP, and it was at a level of resistance. One, let's talk about where it came from, right? So where it came from was a buy zone, major buy zone, like on a 2 week or 1 week time frame, right? Happened extremely fast. This was really 2 weeks. If you look at it, 2 weeks, it's been bullish, but overall, you want to count that. So four out of the 6 weeks, it's been bullish. See what I'm saying? So what I was looking at is that this was a level of resistance. Well, really, this was. So you can see price pushed up to these levels and basically started selling off from that area. And that's what I was expecting. I just didn't know how volatile like this market would spike up. And this is one of the more aggressive pairs within the Forex space, and they pay a little bit more compared to other pairs. But one thing that I don't like about Euro GBP is that it's pretty choppy. But as you can see, that it's created resistance. It has created a ceiling for us to sell the market off of. The only thing you have to do is find your position within one of these candles and stuff. So my guess is that because my analysis is that because it already retested this candle. Let me see what percentage that is. Shallow retest. But the momentum is definitely selling pressure. So you just have to find your entry within this space. So this is an 8-hour time frame. Now this is a custom time frame that I created. So you have to add this on your trading view when you're looking at those time frames. But what I'm looking at is that we'll probably come back up to this to this indicator right here, somewhere within that space. Maybe even back up here and then sell off. But I'm thinking we'll probably come back, just a shallow pullback, and continue to sell off. So I do think that this has given us a selling opportunity, either back to this level or all the way back to this level of consolidation down here. My first guess would be back to this level first. And then, if price tries to create support off of this foundation, they'll probably push up and then want to come down. But as far as Euro GBP is concerned, I think we're in selling territory. You know what I'm saying? So it's quiet this week. You know what I mean? Not a lot has gone on, but that's actually the better time to analyze the market when there's not a lot of chaos brewing. So everybody should just be looking at the market accordingly and be ready. Be ready for what's about to happen. Because these bull moves, these bear moves are coming. Like I said, we're only in this Q2. Oh, even when you look at this, so we're only in Q2. We haven't hit Q3 yet, but I'm telling you, by the time Q3 gets here, that's when the market is going to start trending. And you're going to want to already know this information based off of back testing, based off of your expectations on what the market is trying to do off of structural foundations, right? So that's all I got for everybody today. This is our market overview. So these are the things that I'm looking for the market to carry on this entire week until we get to like Wednesday or Thursday. And then we may have possible reversals, but like I said, I do expect this to happen like the entire week. and then we'll see. It just depends. Like, so for example, for indices, like S&P, if we can get down to that gap, then I'm probably starting to look for buys at that point. But if we haven't made it down to that area, then you know, I'm obviously still looking for sells and stuff. So that's all I got, traders. So I'll see everybody on my next video with Digital Goats Academy. Again, don't forget to like, comment, and subscribe, guys. So I hope everybody has a successful trading week. And yeah, let's make some money this week.